This is Aaron Levine from LG Insurance. We're here with another episode of And Insurance. This is our fifth episode. We've had some great guests. We've been talking about a lot of great professional topics. Today I have Jason Melando with us. Jason works with LG Insurance Agency. He's our life insurance and our, not our financial planner, but he works on the financial side of things for life insurance, disability insurance, long-term care insurance, and he's had a long career in the business. And I felt like it was due time to get on camera and talk about a bunch of things. So, Jason, thanks for joining me today.
My
Glad to
pleasure.
have you on And Insurance.
Thank
Why
you.
don't you give us just a little bit of your background? Tell us about what you've been doing the last 10 years or so, and then we'll jump into the topics.
Sure. So I started in the business over 10 years ago, working on the career side with some of the big carriers. I would say I did that for about 7 years or so. No, maybe about 6 years before I decided to go off on my own, become an independent agent, working on the risk management side. And a couple years after that, I ended up syncing up with yourself and expanded my risk management portfolio into property and casualty, as you know. And the rest is history.
That's awesome. So I love you always use the risk management term. We love, managing risk. We sell insurance as a product to offset risk, to cover the dollars and cents that could be missed should a situation arrive. We're going to talk about catastrophic events, right? We sell product to cover certain life events that could potentially happen. So I want to categorize these things as catastrophic events. Catastrophic planning ties into retirement planning. You work
Yep.
with a lot of planners as well, right?
Yes. Yeah. I get a lot of referrals from wealth managers. So yeah, a
Okay.
lot of the planning aspect.
So these wealth managers and retirement planners are looking to preserve wealth,
Yep.
right? Their
Yep. Yep.
their
Yep.
main goal is to create wealth, and keeping people alive and having insurance in place helps them to in their full plan.
Correct. Yeah. I mean, their business model is asset management. And if a client doesn't have the proper protections in place, what essentially happens is the assets are used to help fund any shortfall in economic finances, the bills, expenses, whatever it may be. Insurance helps fulfill that gap, so the assets on the wealth management side are not used.
Okay.
Yeah.
So I want to take a couple of different segments of life, different life events, life phases that people go through from getting out of college, starting a career, whether it's in a professional service as a doctor or in banking or wealth management.
hmm
So be it. Go through that. Go through family planning. Go through when you have significant wealth, and then move on to retirement and look at some of the different insurance products and the whys around and how we would do it.
Sure.
So starting simple and starting small, a lot of times at LG Insurance, we're working with individuals that are buying their first house.
hmm
They're starting a family. So let's talk about what we like to recommend, what you like to put in place for some of these young people that are just starting to build a family, just buying their first home and then starting to accumulate wealth.
Sure. So when you're dealing with someone who is just really getting going with their careers, starting to make some big financial moves, i.e., buy a house, like you spoke of, maybe having their first child, you want to kind of keep it simple with them and educate them on what insurance actually can do for them. And you want essentially what I believe you want to do in the beginning is minimize their costs. The important thing is to allow them to be able to get the insurance without having to be cash poor. So we make sure that they have the proper insurance in place first, and then essentially work on getting them that program in place so that they can have it now and essentially change it later if they need to do so.
So what types of insurance products would we be looking at?
Essentially, the easiest one is the term insurance. Term insurance is really simple to set up. The premium, it is what it is. It's the cost of the insurance, and it's set for a period of time. What's good about those types of products is that if you essentially want to convert it into something like a whole life, you have the capabilities to do so. That's when someone starts to think about more about beyond the term, for example, say
Mhm.
for life expectancy. And essentially it's cost effective for the program for the family.
So a convertible are all term policies convertible?
The estate, pretty much, yeah.
Okay.
Yeah.
So having that option, should your health change in the
hmm
future, or should you accumulate more wealth and want to convert it to a whole life? Why would somebody want to convert to a whole life policy?
Well, one of the biggest risks with term insurance is you outlive the insurance, right? Everyone, if you have a 20-year term, younger people essentially would like to live past the 20 years,
Right.
and hopefully live for another 50 years or so. A lot of individuals and families don't like the idea of that risk being there. So what they'll do is they'll purchase or invest in what I like to say, invest in a whole life contract, for example, that will be there for the rest of their life. So it not only gives them that certainty that they'll have the insurance for a long period of time, it also gives them the opportunity to maybe save into additional monies that can complement something like a 401k program.
Sounds like I need to convert one of my term
Yeah,
policies.
exactly. Same.
Put that on the list. Can
Yeah,
we talk about that
exactly.
when we get back to the office? That would be great.
It's funny you said that because I literally emailed my wife today and said we need to review our insurance program.
It's time to it's always, the cobbler's shoes are the worst. We talk about
Exactly
this on a regular
right.
basis.
Yeah.
That looking at our own insurance program is
So true.
difficult. And
So true.
sometimes it helps having somebody to bounce that off of like yourself.
So
Now,
true.
one of my favorite products in the market revolves around paycheck protection.
Sure. Yes.
Right?
Yeah.
I know I'm more expensive, disabled, unable to produce an income than I am dead.
As are most young people. Yeah.
Right. So
Yeah.
what do we do to cover that gap?
Right. I like to expand on that. I like to call it income protection.
Okay.
Right. Because essentially, in my opinion, and in most um, of my colleagues think that your income is your number one asset. That's a lot of people think it's their home, right? Because it's usually the biggest check you write. It's like here, and it's the biggest asset they have. But essentially, without the
Mortgage.
right, without their income, there's no home.
Right.
Right. So I like to label it as income protection to help supplement what you get through your work. I think where we're getting a lot of traction today is individuals don't really understand what they get through their work. So by doing a review of their current program, we make sure that it's either sufficient or we need to build upon it.
Right. And we also worry about when that work ceases and
Sure.
people move on to new careers, new companies. Things are changing so rapidly, so quickly in the marketplace, in the insurance marketplace, in the professional market space right now with COVID and beyond, and where we're going
Correct.
to next. So knowing where you're at today is great. Not knowing where you're going to be at tomorrow, makes me a little anxious. But they tell me to live in the moment, but we got to make sure we
Exactly.
protect the
Exactly.
paycheck today and make sure that we have what we have is portable, right?
Right. But yeah, exactly right. And why I don't like to call it disability insurance, because that tends to pigeonhole people to think that it's just falling and getting hurt.
Right.
They tend to forget that, yeah, musculoskeletal is number one, that causes the most, but number two is illness. People tend to forget that if you become ill with a major disease or whatever it may be, you could be out extensively for a year, 2 years, 10 years. That kind of coverage will help protect your income as
So
well.
mental illness and
Correct.
other diseases, late onset
It's
style
not just
diseases.
muscular, which is the most common,
Right.
but right behind it is mental and just general illness itself. Yeah.
Got it. So, we're covering young people, young families, we're protecting, their bigger assets, helping their kids go to college should a situation arise and one parent, deceases. There's a lot of other different styles of insurance that we work with. Now let's move on to a business owner. I had Joe
Hmm.
Astorita from Bonfilio and Astorita here a couple weeks ago. We were talking about leases. Joe and I have spent some time talking about setting up businesses and buy-sell agreements. So if I'm starting a new business and I have a partner in that business, right, a buy-sell agreement is always recommended. We always want to think of the end in mind.
Hmm.
There's insurance that can be used to fund buy-sells. Tell me about how that works.
Correct. Yeah. So essentially, what Joe was saying is that the buy-sell agreement is a legal document, right? But it means nothing if you don't have a funding mechanism. And a lot of small businesses who are maybe 3 to 5 years in business don't necessarily have that capital on the side to be able to help fund a buy-sell agreement. So what they do is they leverage life insurance to be able to be that funding mechanism, of the buy-sell arrangement. Essentially, what you're doing is you're protecting your interest and your family's interest. So not only is your partner helping keep the business going, you're essentially protecting your family for what's right as far as the value of their business.
And I don't have to work with my partner's spouse because we
Exactly. I
have
mean, you
insurance
may
to fund a
love
buyout.
you may say we're in business and you're like, hey, your wife is really cool to hang out with, but I don't want to do business with her.
No offense,
Which is
Emma
no
or
offense,
Casey.
but it's very common.
Right.
It's very common.
Right.
You want to make sure that not only it's in place, but it's really important. Business owners need to know this is that it needs to be updated. I've come across this once that a buy sell was being disbanded because of something happening and it was set up 10 years ago. So the value of the business is now here when it started here.
Right.
So now, since you didn't update it,
Interesting.
the surviving spouse is only obligated to get what was initially set up.
Right.
So that needs to be managed on an ongoing basis, especially if the business is doing well.
Who owns the insurance policies in a buy-sell agreement? Do you own, is it cross-purchase? Does the business own them?
Yes and yes. So really, any more than two or three partners, you're gonna any more than two, three partners, you want to do an entity owned policy where the
Mhm.
company owns the policies on the individuals. If it's two people or three people, you can manage that cross purchase where you're each buying a
Right.
policy on each other. A lot more administration involved with that. I usually recommend, even for just a partnership, is to have the company own the
That's
business.
like Russian roulette, with life insurance or
Yeah, and then you're dealing with a lot of parts, and it takes a little bit longer to set up, especially if there's a time concern.
So
Yeah,
basically, anybody starting up a business, if you have a partner, seek an attorney to help set up your buy-sell agreement and get that set up, and then make sure you have the funding mechanism in place, but also a plan to update that funding. Right?
correct.
It's an
Yeah,
important. Insurance is an expense until you need it. Um, making sure you have the right policies in place is going to be super important, and then being sure that you can afford to update those policies, every couple of years, is going to be important because people forget that it's an ongoing expense
right.
and it's going to get more expensive as we get older. That's just how insurance is going to work,
But
on this
essentially,
side of
that's our
things,
job, right?
and
Is to
and
stay
and
on
keep
top of
things
that for
rolling.
them. Yeah, business owners are busy.
So, keeping on the business theme, real quick, key man, key person,
Mm, yeah.
life insurance is another hot topic for certain businesses. Why would a corporation purchase a key man policy, a key person policy?
Good question. So let's just put in a scenario. Say you have a business, there's a couple dozen people on there, and you have a top salesperson who's generating a million, $2 million in revenue. And then all of a sudden something happens and that person's gone. Where are you going to get that $2 million right away? Right? Or over the course of a 12-month period? Very hard to find because you try to bring someone in, it's going to cost money to replace them, and they has a ramp up period. It's going to take
Right.
quite some time to get that. By supplementing it with a, say, life insurance contract, the business is right away funded to be able to not only keep the revenue coming in that was lost due to that unfortunate incident, but also help recruit a new person,
Mhm.
which is very important. You want to try to replace somebody.
So I say, Jason, you're making me a lot of money. I'm buying life insurance on you. Can you say no?
You can, but as long as you asked me, you can't do. Yeah, good question.
I
That's
can't
a
just
good point,
buy it on
actually,
you without you
because
knowing about it.
company-owned life insurance is frowned upon to some degree because a lot of times in the past it was done without the employee knowing. It still happens from time to time, which is strange, but
Interesting.
the employee has to know
Right.
that they do it. Could they say no? I'm sure they can, but usually doesn't happen.
Could be part of the employment contract as it comes up for review. But I'm just like curious about that. Like, you're buying insurance on me, and now I'm worth a lot more to you dead than I am alive. If you put a contract on my head.
So this is what you do. Exactly.
We're not going to South America
When you
anytime soon, are we?
look at yeah, right. We just got a new client. He's down south. Go get him. Now, one way to combat that is to the permanent strategy. Use a permanent contract, like the whole life, that builds up say a retirement
Mhm.
or a deferred compensation type scenario, where not only do you have the insurance if that person happens to pass away, but if they keep going and keep killing it, you're now funding an additional retirement program or deferred compensation program that they can use at a later date. That's a good way to get someone that may be a little hesitant to say, all right, we can, two birds with one stone. We can both be happy about this. I can get the key man coverage and you can now get an additional savings program.
So on that
That's one way to do
deferred
it.
comp, if that key person leaves the company, who gets the insurance policy?
Oh, it essentially just goes back to the owner, the business.
The
The
business will
business owns
maintain
it, yeah, and they dissolve the contract and take the cash value. Yeah,
Got it.
exactly.
They take the cash value or keep the insurance on that person
They
forever.
could,
They could, right?
They
Or, I
essentially
mean,
could,
I don't
but more than
know.
likely probably not. Or they would just give it to. They can, say, "Hey, listen, we'll sell it to you."
They can gift it or
Yeah,
sell it.
gift it or sell it. Yeah, to
Got it.
the employee.
So, so moving on before this conversation takes any more left turns.
Before you get to that, though, do you have the life insurance? Disability is just as important. You're for
Yeah.
buy sells and for key
Now, can we
people.
buy groups of disability, right? When we get a lot of larger white collar style firms,
Yeah, yeah,
can we buy a group policy of, right? I had Beth Fredrickson from Aflac. She was on the show a couple of weeks ago,
yeah.
and we talked about a lot of short term related disability, and that's all group style contracts, 3 or more employees.
Hmm.
Is there a way to do it for the long term disability to buy a group contract?
Absolutely, you can do it through organizations like Unum or something like that. Or plus, you can expand on that and just cater to the executives and
Right.
do what's called an executive benefit program, where you get disability contracts set up for those key people
Mhm.
with no medicals. They get set up literally within a couple of days
And are
if
those
they're in agreement.
portable? Can those,
Absolutely, yeah. They're owned by the individual employee.
they're owned by the individual employee. So
Yeah,
there's a tax benefit because they're owned by the individual employee, or those taxed? Is the
it's
benefit
all tax.
taxed?
It's all tax free
It's all
to the
tax free.
employer. Yeah, all
Okay.
tax free. It's fantastic because it's given those key people essential coverage, and it's helping retain those employees
Okay.
as well. Yeah, which is
Benefits are
important.
important. I mean, we do
Yeah,
our best at LG Insurance at the office to retain our employees, to make sure we're offering a significant benefits program. But at the same time, we're not a thousand employee company, but we
right.
do what we can for with what we have, and try to make it as rich as possible. So
Absolutely.
these are all great ideas and great things to take away. Now, taking insurance to a whole nother level, when we have individuals, families with significant wealth,
Hmm.
we've done some policies that are going to offset, estate taxes and things like that. So just talk about that, and when should people of retirement age look at a whole life contract or look at a different style contract to offset, a tax liability, or to put money aside for their family. They don't need the life insurance themselves or
Right.
for their spouse or for their children necessarily, but to offset taxes or other issues. Talk about that a little bit.
Well, a couple ways you can approach that. One, with the estate tax, fortunately, there's not a lot of people that get exposed to it this day. I mean, the exclusion's pretty high, where it's over 20 million for a married couple.
Mhm.
So it's the top echelon that have to worry about that. We're working on a case on that.
Right.
But essentially, what they would do there is put in a permanent contract that would be guaranteed for a period of time to help cover any essential tax consequence that would come
Okay.
upon the passing of both individuals. That's on the estate planning side.
So you
If
do
s-
a second to die style
yeah,
policy,
exactly.
right?
Yeah, exactly. Because essentially, it's a protecting the heirs to the estate,
Okay.
so they don't have to go and have to liquidate any assets or do anything that may take time, because you have a time horizon of about 9 months to be able to pay that tax.
Right.
Easiest way to do that is leverage insurance and pennies on the dollar and get that tax-free money and take care of the tax right away.
Got it.
And then essentially the state is kept whole for the heirs. Yeah.
Okay. So taking
Great
it, so if we
strategy.
don't have individuals of significant wealth, people of retirement age, what would motivate somebody of retirement age to purchase additional life insurance? Would it be for grandkids, mostly family related stuff, business
Right.
related stuff?
Right.
What are some of the things that retirees look for when purchasing life insurance?
Well, just to expand a little bit more on the estate tax, with the current presidency and administration, there is a risk of him lowering the exclusion amount,
Right.
and that opens up the universe to a lot more
Got it.
retirees. I mean, they're kicking the can about $3 million a person, which would open up the universe to quite a
Wow.
few people as opposed to where it is today. So there's a lot of talk going back and forth of getting people somewhat prepared for that.
Right.
Now, if they're not in that particular concern, but they want to leave, say, a legacy,
Mhm.
right? It's called legacy planning. There's a number of ways you could do that. One, you could do a guarantee type insurance program that'll guarantee the insurance up to a certain age. It doesn't really worry about giving cash or cash value. It's just basically saying, this is set up to give to my grandkids,
Right.
right? X amount of dollars. Same thing with any other type of guarantee contract, like a whole life. As far as that concerned, they could do, as many of my grandparents do, is set up contracts for their grandkids to be able to say, hey, listen, you know what? I want to make sure they're going to be okay in the next 20 or 30 years, and get some tax-free money for maybe a down payment on a house or something like that. So there's a number of things.
So it's
different
just a
things.
good diversification strategy at some point, right? So
Yep.
as we go through life, as growing into, family, business, and retirement, there's different strategies and different
Sure.
reasons, people do certain things, and a lot of it is diversification and protection if
Hmm.
you don't have all the assets and the cash, at end of life, right?
Correct. Yes. A lot of times people are afraid they're not able to pass anything on because they're basically saying, "Oh, well, I don't have that much and I need to use it."
Right.
So now what is an alternative? And the way I usually position it is leverage the insurance so you can spend every dollar you have. You know, the last check should bounce and that should be to the funeral director. And then whatever is left is in the insurance
Right.
for your kids to pass on. So if you have a couple $1 million in your estate and you want to pass on at least $1 million, but you're afraid you're going to spend it all in retirement,
Guarantee it.
guarantee $1 million with insurance, then you have the free will to spend any dollar amount you need for retirement without having to worry about
Right.
passing it on to your family. And that's all on a tax-free basis, which is great.
Awesome.
Yeah.
So we've covered a full spectrum of different life insurance and disability style policies, income protection policies here, but we start with premiums
Hmm.
pretty dang low. So not everything is going to be, significant money. A cheap term policy for a healthy 35-year-old who's just starting a family and just bought their first house, for $500,000 or $1 million of coverage is only a couple of $100 a year. So we're
Yes.
talking 20, 30, $40 a month for a healthy individual. So, the moral of the story is don't be afraid to reach out to Jason or our office to talk about life insurance. Have the conversation. People are afraid of the death talk, and I'm not going to die. It's not going to happen to me. But when it does happen to you, leaving your family with not enough, or leaving your business with not enough, so the business can continue, it's important to continue to look at. So any closing remarks from you? Any other thoughts
No, I
that
mean,
we
just to
anything we
expand on that.
missed?
Yeah, just to expand on that. The GoFundMe pages. They work well. They're great, but it always makes me think that I don't think that family planned
I get angry.
for the insurance
Get angry.
for this to possibly happen, right? Unexpectedly.
Right.
I think they're great. They're great to raise money for people. It's a good thing to do. But I usually get a little agitated saying, "I wonder if someone talked to them."
I get angry, and
They
then
get
I donate.
Yeah, exactly.
I'm
You
like, all
feel
right, I
bad. Yeah,
feel guilty
exactly.
because I just got mad at somebody that lost their house or
Exactly.
their loved one. But then I'm like, all right, here's $50.
Exactly.
But like,
Exactly.
I
It's
hope
just
that my family doesn't need to use a GoFundMe page when something happens to me, because we have significant insurance, and we shouldn't have to worry about that GoFundMe, because eventually the GoFundMe goes away. And if you can get that 20 or 30,000 in GoFundMe, that's
Yeah,
fantastic.
exactly. Yeah,
But for
exactly.
just a couple of bucks, you're going to get a couple of 100,000 in that life insurance, and really be
Exactly.
well set up. And I think you can sleep better at night when you have proper insurance. It's just one less thing to be anxious about and worry about. So it's all good stuff. So you can reach Jason at lginsurancinc.com, or hit us up on our YouTube, Facebook, Instagram, wherever you're seeing this video. If you have questions, please feel free to reach out and schedule a conversation with Jason or myself, and we're happy to help you out. So Jason, thanks for joining me
Thanks for having
today.
me.
I appreciate
It
diving
was
into
great.
this, and I can't wait for the next one. Thank you.